Let's take a closer look now at how Europe's major indices have reacted to that deal, UBS taking over Credit Suisse. And as Trent was saying there, very different picture at the end of the day to what we were seeing at the beginning of the day here in Europe. The Swiss Stock Exchange ending the day up around just over 0.5%. In Germany, the DAX up strongly, more than 1%, and in London, the FTSE 100 also up just over 1%. So let's talk now to Octavio Marenzi, who's the CEO of Opimas, a management consultancy focused on global capital markets. Welcome to the programme. So this buyout deal designed to calm nerves, restore confidence. Has it done that, do you think?
Well, it seems to be working so far, but I think this is a deal that's going to face a lot of legal challenges and indeed a lot of political challenges as well. I think this is going to be a deal, a transaction that's going to be very deeply unpopular amongst the Swiss public, who are likely to turn against it at some stage in the not too distant future. So I don't think we're anywhere near out of the woods yet on these deals. A bunch of the bondholders of Credit Suisse are very unhappy because they've been wiped out. The equity holders are very unhappy because basically the Swiss government has taken their property away and give it to UBS at much, much lower than market rate was just on Friday afternoon. So we're going to see a lot of challenges on this. I don't think this is a done deal yet.
So plenty of people unhappy then, including initially the markets, which saw a sell-off on the back of this. What did they see that they didn't like?
Well, I think we've basically seen the Credit Suisse equity holders, the shareholders, more or less wiped out. So they've had to take a huge haircut on their holdings. Also, we've seen some of the bondholders of Credit Suisse wiped out as well and basically driven down to zero on a certain type of bond that Credit Suisse had issued. Now, that's an unusual way to go about doing things, to favour the equity holders over the bondholders, but that is what the Swiss regulator did. So there's a lot in this that is to be very unhappy about if you're an investor in banks. Basically, you're looking at very, very steep losses. Even if the depositors within Credit Suisse are made whole and everyone is able to get their money on the deposit side, the equity holders are basically looking at very, very steep losses here. And in particular, the Saudi National Bank that had put in $1.5 billion not so long ago.
So this new bank, assuming it all goes ahead, will be made up of UBS and Credit Suisse. What do you think it will look like? What will stay and what could go?
Well, first of all, I think the most interesting part of Credit Suisse is probably its Swiss banking operation and its wealth management. And their UBS and Credit Suisse have a very, very large overlap in terms of geographic coverage, in terms of where their branches are within Switzerland. So I would expect a lot of those things to disappear. So a lot of those job losses will be focused around that. There'll be very substantial losses, I think, in the investment banking arm of Credit Suisse, where I suspect that UBS, though they don't know this yet because they just acquired the thing. Basically, they bought themselves a black box. They're not entirely sure what's inside it, and that's why they had to get these very substantial guarantees from the Swiss government. But they're going to have to take that apart. But I suspect the investment banking arm of Credit Suisse is basically going to be shut down. There might be some areas where Credit Suisse is stronger than UBS, and they'll retain those. But I would expect to see substantial job losses within the investment banking arm of Credit Suisse, especially in New York and in Asia. So we're going to see some tying down there of the resources and unwinding of the positions there.
OK, Octavio Marenzi from Opimas, good to talk to you today. Thank you very much for joining us on the programme.
Thank you.